Hi everybody, welcome back to FIRL Crypto. We're still in the middle of lockdown and so the videos are still being shot from my little bedroom over here. I hope you guys can bear with us. Today's video is extra special. I'm going to teach you guys how to take your crypto like Bitcoin and other kinds of coins and to change that into money. Woo! Well, basically we're going to learn how to make your crypto work for you. A quick disclaimer before I begin, I'm not a financial advisor, I'm just a cryptocurrency educator. I'm here to educate you guys and help you guys understand Bitcoin and cryptocurrency a lot easier so that you can make more informed investment decisions. So, how do you make money? Now, I know that seems like a personal question, and don't worry, you don't have to reveal the answer to me. But essentially, when it comes to making money, there are two broad categories: active income or passive income. Active income is when you have to actively do a lot of work in order to generate some kind of money. Passive income is when you don't have to do much work or minimal or almost no work and you still manage to generate income. Let me give you some examples. I used to be a psychology lecturer. I used to lecture at a university, and every month after all my hours of lecturing, I'll get paid a certain salary, right? So that's active income. I work, I get my salary. Now, passive income, for example, would be people who own houses and they don't live in the houses, but rather they rent the houses out for other people. So I don't have to do any of the work if I'm the house owner. I just rent it out and every month I collect rental income. That's an example of passive income. With doing very minimal work, I can still get some regular income. In the same way, cryptocurrency can also give you active and passive income. Let's find out how. Firstly, let's talk about the active ways of earning crypto. One of the examples I can give you is mining. Now, you've probably heard about miners and cryptocurrency mining, Bitcoin mining and stuff like that. That's what I'm referring to. Now, mining is basically the process of solving complex mathematical equations in order to process transactions and add them to the next block in the blockchain. Let's use Bitcoin for an example here. The Bitcoin blockchain, which was created in 2009, has constantly been adding blocks on average about 10 minutes to 15 minutes at a time. And each of those 10-minute blocks, which are mined, have to be processed by computers. Computers are trying to solve and find a hash and all that. I won't go into the technical details of it, but essentially they're kind of like solving math problems, right? 1 plus 1 is 2, tada, let's add a new block. 2 plus 2 is 3, tada, let's add a new block. That's a very simplified explanation, but essentially that's kind of what's going on. Now, on one hand, mining is profitable because miners earn Bitcoin block rewards. For every block that gets mined onto the Bitcoin blockchain, the miner is currently receiving, at the time of filming this video, 6.25 Bitcoins every 10 minutes or so on average when a block gets mined. Now, that's a lot of money, right? Depending on when you watch this video, I don't know what the price of Bitcoin will be like, but today when I'm currently filming it, the price of Bitcoin plus the multiplied by the 6.25 is approximately close to 1 million ringgit every 10 minutes. Can you imagine thinking of a job that's on earth that pays you 1 million ringgit 10 minutes? I can't think of anything, right? And that being said, on one hand, it sounds very profitable, but at the same time, you have to realize that these computers take a lot of power. You need to have a lot of electricity, and not just that, you also need to buy a lot of specialized computers, because remember, miners are fighting with all the other miners around the world, from China, Germany, US, and many other countries. So oftentimes people say that you need a lot of capital to start up a mining operation, and you also need a lot of electricity. Now, for those reasons, you've actually probably seen there are a lot of reports of miners in Malaysia getting caught by the police. Why? Because they are stealing electricity. It's not very profitable to do mining in a country like Malaysia because electricity here is not very cheap. You need to go to another country where electricity is cheap, and then it's easy to buy all these computers and put them together. At the same time, the computer is not just like your normal computer, yeah? What we use are usually specialized mining rigs. Interestingly enough, you can even buy these mining rigs on Shopee and other online platforms, and a good example here is what is known as the Ant Miner, right? It's very easy because it is specialized when it comes to mining cryptocurrency blockchains. Also, another interesting thing to note is right now, the block rewards are 6.25 Bitcoins. However, over a few years, every 4 years rather, they have what is known as the Bitcoin halving, right? So every time 4 years has passed since the last halving, the next halving will reduce the rewards by half. and then again reduce the rewards by half. Now, unless the price of Bitcoin keeps going up and up and up, when the reducing of the rewards kicks in, the halving of Bitcoin, it will be less and less profitable. So mining is only a profitable active source of income if one, you have high startup capital, you know all the technical know-how when it comes to setting up mining rigs and how it works and so on and so forth. And thirdly, as long as the price of Bitcoin continues to rise, then definitely you can make a lot of money. However, I don't really personally know any friends in Malaysia who are doing Bitcoin mining profitably. I know of people overseas who managed to pull it off, but in Malaysia, not so much. If you are a profitable Bitcoin miner, let me know. I'd love to understand more and collaborate with you, perhaps to do a video to explain to viewers to understand better about how Bitcoin mining works. The second most popular way of earning an active income in cryptocurrency is by doing trading. Now, trading, as I'm sure you're familiar with, is based on a very simple concept. Buy low, sell high. Unfortunately, most of us buy high and sell low. That's typically how most of us enter into the cryptocurrency market. Why? Because markets are very volatile, always going up, going down, going up, going down. Elon Musk give one tweet, suddenly shoot up. You know, that can really affect traders in the market. Now, broadly speaking, there are three different types of traders. The first type is known as a scalper. A scalper is someone who trades on a very short time frame, meaning when they look at the graph, they're only looking at 1 minute or 5 minute graphs, right? 1 minute, 5 minute, every 1 minute the numbers are changing, right? So this kind of a person, they have to be constantly looking at the graph, watching. In my opinion, very stressful. Now, can they make profit? Yes, they can. And they don't usually need a lot of startup capital. Why? Because they're just trading small positions in very small time frames. If they're really, really good, all those profits can add up in the long term and they can be a successful trader. But it's very high risk because you're trading an incredibly volatile market in very short time frames. So I don't recommend it for beginners. Secondly, another type of trading is known as day trading. Now, these people usually take positions within an hour or within at least open and close the position within 1 day, right? That's why it's called day trading. It's a lot more to what beginners are familiar with and what beginners would usually learn. Now, I'm not much of a trader, so I don't really teach trading in depth. However, we may cover trading, simple trading protocols and understanding in one of our future videos on the channel. If you want to learn more about trading, let me know in the comments below and I'll try to produce a video just for you guys. Now, day traders don't need a huge amount of capital and the risk is a lot less than a scalper, but overall still risky because cryptocurrency is a very volatile market. Now, the third type of trader is what is known as a swing trader. A swing trader takes much longer positions in the market, several days, maybe up to 1 or 2 weeks even. Why? Because a swing trader is looking for trends and patterns in the market. When they see a trend emerging, they will buy. They'll wait for the trend to finish and then they sell when it hopefully goes up. Or if it's going down, they learn how to short the market, but that's a bit more advanced. Now, swing trading is a lot more profitable, but only if you're very disciplined and you have the right skill. It's not easy to spot patterns in the market, especially in cryptocurrency, because markets are so volatile. Everything is moving at every second. So when it comes to trading in general, yes, it is a profitable business, but statistics have shown that a majority of people lose money in trading. I know, I have tried to do trading and I've lost a lot of money. I have not even managed to make back the money by trading the money that I lost, right? So I don't recommend it, especially for beginners. I prefer to just invest, buy and keep for the long term. But if you want to do it and you're willing to put in the effort, the discipline and the mental energy to study how to trade and reading graphs, then perhaps you might also be very, very profitable. But remember, it's not easy. Do make sure that you do your own research before going into trading. By the way, before I forget, if you're enjoying our content so far, go to the description. We've got a special reward for you. It's a free ebook, Bitcoin 101. This is a very simple guide to help explain the basics of Bitcoin and also why you should consider it as the cryptocurrency investment of the future. In fact, you can even download the link and then share that link with other friends so that they can get their own personalized copy. Now that we've covered the active income methods of generating income via cryptocurrency, let's talk about the passive methods where you don't have to do much work. My first and favorite method is to buy and HODL. Just keep that money safely. Now, some of you, if you're a beginner in cryptocurrency, you might be wondering, what is this word HODL? H-O-D-L, HODL. I've never seen that in the English language. Well, it's about to be added in, I assure you that, because HODL stands for hold on for dear life. It's like as if you're on a roller coaster and you're holding on. That's the kind of image that it gives. In fact, the term HODL came from a Bitcoin forum in 2013 where a user posted a paragraph of text and the title said, "I am HODLing." And based on that, people use that typo and now everybody's using that same term, H-O-D-L, HODL. In fact, at the time when that was posted, Bitcoin was only worth 551 USD. Today, if you had kept it all those years until today, you would have made a profit of almost 6,000% or more. Imagine that. All you needed to do was to buy and HODL. No need to do any work, no need to stress, just buy and keep it for the long term. This is my favorite method of investing, especially for beginners. If you found something that is fundamentally very strong and you believe in it, buy and keep it for the long term. No need to stress, no need to look at charts, no need to look at the market, no need to listen to all the fear, uncertainty and doubt that people spread online. Just buy, HODL and keep it for the long term. Very, very stress-free and personally my preferred method of investing. If you're new to crypto and you want to start buying and HODLing for life, then guess what? All you need to do is to download a cryptocurrency app. A very simple one used in Malaysia is called LUNO. It's personally at FIRL Crypto one of our favorite apps to use. In fact, you can go down to the link in the description below and use our LUNO referral link. In fact, if you buy 250 ringgit worth of crypto using our link, you'll get a 25 ringgit reward of Bitcoin. Take that Bitcoin and HODL it and see how much it can grow. Now, are there any risks to the buy and HODL method of passive income? Yes, there are. One of the risks is that you lose out on many of the great gains that you might see people posting about online. You see, in a volatile market, if you know how to time the market and buy when it's low and sell when it's high, you can make hundreds and hundreds percentage of profit. However, if you just buy and HODL, the profit does grow, but it's a lot slower on the way to growth, right? Now, at the same time, as I mentioned earlier, there's a lot of risk in a volatile market. Buying and HODLing helps to minimize that risk, but at the same time, you lose out on some of the higher gains that you possibly could have gotten from trading. At the same time, another risk is that buying and HODLing for the long term does not guarantee that the value of your crypto is going to go up in the future. In fact, from the time cryptocurrency started until now, there are many different cryptocurrency projects that have just died and completely become a graveyard of crypto coins where people have bought thousands and thousands of dollars worth of them, now worth zero or even less. So you don't want to be caught in that situation. We cannot guarantee that Bitcoin or other coins are going to always be valuable. Who knows, maybe 5 years from now, a new crypto will emerge from the technology workspace and it might even take over Bitcoin. We can't guarantee that for sure. However, at FIRL Crypto, currently we believe that Bitcoin really is one of the future currencies, and that's why we choose to keep and HODL for life. By the way, here's a bonus just for you guys. Did you know that when you buy and HODL, you can actually even generate more interest on top of the capital gains? How do you do that? Well, you have to use a special app. One of the apps that we use is called Celsius. Celsius is a very strong company that allows users to earn interest on their deposits of cryptocurrency. Basically, what happens is that you take your cryptocurrency, you deposit into the Celsius app, and then Celsius pays you interest because they will take your cryptocurrency and loan it out to institutions, charge them an interest, take the money and pay back about 80% of the interest back to users. Isn't that amazing? At the time of shooting this video, Celsius is now offering 6.2% interest on your Bitcoin. So even if you have 10 ringgit worth of Bitcoin you put into Celsius, they will pay you 6.2%, right? And that's a lot of money. In comparison, Malaysian banks usually only offer about 0.25% interest per year on your Malaysian ringgit. And do you think Malaysian ringgit is going to increase the same way cryptocurrencies increase? I'm not too sure about that, but personally, I've invested most of my cryptocurrencies into Celsius because it's a safe, easy to use platform and it gives me a lot of interest. It rewards me for being a hodler. Now, if you want to get started on Celsius, go to the link in the description below and you can get a reward when you sign up using our link. We will definitely be covering Celsius in a lot more detail in one of our future videos, so make sure you subscribe and hit that notification bell to stay up to date with our latest content. Now, another form of passive income generation through crypto is known as staking. What is staking? Well, it's similar to how when you invest in certain stocks in the stock market and those stocks pay you dividend every year, right? It's similar to that concept. You invest in a particular cryptocurrency, you put that cryptocurrency into a platform and the platform pays you a kind of dividend. Now, these dividends can come out in the same cryptocurrency that you bought, or some of them even pay you in a different form of cryptocurrency. The method is known as staking your crypto. Now, there are a lot of different staking opportunities in the world. I'm just going to be talking about two general ones. The first one is a lot easier. It's known as exchange staking. What happens is that you go to a particular cryptocurrency exchange and whatever crypto you have, you can stake that into the wallet automatically. Now, companies that offer this are, for example, Binance and Huobi. Right? You can navigate yourself to the area that allows you to stake this. It's usually called like earnings or finance. And then when you stake your cryptocurrency on these platforms, they will pay you an interest. Now, usually these platforms offer two kinds of staking, either flexible, where you can put in and take out your money easily, or lock staking, where you have to put in your money for a certain amount of time, right? 30 days, 60 days, 90 days. And then they will also show you how much interest you're going to earn based on the crypto that you have staked in. In this comparison, we can see, for example, between these two companies, Binance is paying this amount of interest and Huobi is paying this amount of interest. You can decide whichever platform you want to stake on. The advantages of cryptocurrency staking via these exchange wallets is that the exchange handles all the work for you. You don't have to worry about what's going on behind the scenes and all that. You just click a button, ta-da, you're done. But remember, the risk of using a cryptocurrency exchange is that not your keys, not your crypto. You have to trust that this company is going to take care of your cryptocurrency. What if they get hacked? What if they lose your account? Your crypto may be lost forever. So always be careful about which of the exchanges you choose. If you want to use a Binance or Huobi exchange, we have referral links down in the description below where you can get started and you get a trading discount if you use our special referral links. A second type of staking is on decentralized applications. Now, earlier when I talked about staking using an exchange, that's a centralized method because the exchange is the company that controls everything. They handle all of it for you, so you don't have to worry, just click a button. Now, when it comes to a decentralized platform, you have to do a lot more manual work. First, of course, you need to research and make sure you know where you are staking, make sure it's a safe platform and that nobody's going to scam you, and also have to decide what cryptocurrency you want to stake. Now, let me give you a real-life example. I'm currently staking some of my Cardano, which is known as ADA, right? So if you own ADA, you can stake it in Cardano staking pools. That's how it functions. Reason being because unlike Bitcoin, which is run through a proof of work mechanism, Cardano is run by a proof of stake mechanism. So all these different pools involve a lot of different Cardano users who put their Cardano into a pool. That's what we call it, a staking pool. And the more Cardano is in one pool, there's a higher probability that that pool will be chosen to mint, or rather not mint, not mine, but to forge, yes, I remember now, to forge the next block for the Cardano blockchain. Now, I won't go into the details of proof of work versus proof of stake. I'll cover that in a future video. But for now, just keep in mind that I can take my Cardano and put it into a pool and earn interest in Cardano, right? Currently, I'm staking it in a pool that is run by some friends of mine in Malaysia. In fact, if I'm not mistaken, they are Malaysia's first staking pool. They're called Lambda. You can find the link to their staking pool and instructions of how to stake in the description below, right? So check them out if you're interested in staking Cardano. It's very straightforward. I use an app called DYOR, which is a mobile wallet. I put my Cardano into the app and then I go and I choose from a list of different staking pools and I choose my friend's pool, which is called Lambda. I stake it in there by just delegating, and that's it. Basically, that's it. I can sit back, relax, and I'll be collecting interest over time. Currently, the projected interest varies from about 5 to 8% per year, right? But again, it can fluctuate, as in As is the case with anything in cryptocurrency, fluctuations are completely normal and volatility is the name of the game. But that's basically how staking works. You take your crypto, put it into a platform, and that platform pays you dividends in crypto, either the same kind or perhaps even a different kind of crypto. Now, the advantage of staking using a decentralized platform is that you, as the user, have more control. Remember, when you stake on an exchange, you have to trust that the exchange will keep your crypto safe. When I stake my Cardano into the Cardano staking pool, I still have full control over my Cardano, right? The pool operator can't steal it from me. I can take it out whenever I want. I can put it in whenever I want. So I have a lot more freedom. Now, of course, different staking pools come with different rules. Some have a lock-in period where you have to stake for a certain number of days and other rules and so on, which I will not go into details for the scope of this video. Now, the disadvantage of using a decentralized platform for staking is primarily that it's not very user-friendly, especially if you're just a beginner in cryptocurrency. You have to learn how to use different wallets, different protocols, different kinds of altcoins and stuff like that. So I don't recommend it for a beginner. But once you've got a taste of cryptocurrency and you understand how it works, you can definitely look into staking. Future videos on FIRL Crypto will cover how to do staking in a better and more safer way. So let's recap about what we've learned about earning income in the cryptocurrency space. Firstly, there's active and passive ways. Active means you have to put in some work. Passive means you can kind of sit back, relax, and enjoy the interest. Active ways include things like mining as well as trading. But mining has a very high startup costs, and trading requires a lot of years of practice and discipline. However, if you have the money, feel free to try mining, and if you have the skill and the patience and the discipline to study, then give trading a try if you want to. On the passive side, we talked about ways of buying and hodling for the long term, especially for investors who don't want to worry about things. Buying and hodling is a very good method, but the disadvantage is that you may lose out on short-term high gains, especially in a volatile market such as cryptocurrency. A second method that you can consider is staking. Staking is really interesting because you can stake using exchanges, which is very easy, and earn interest on your idle cryptocurrency assets. Otherwise, they're just sitting in your wallet and not doing anything. You should make them work for you. The other type of staking is known as decentralized staking, where you can stake in a decentralized platform and also earn interest, but you have to take more risk by being more responsible and taking care of your own cryptocurrency. Also, please remember that just because you can earn in cryptocurrency does not indicate that that cryptocurrency is always going to be valuable. Cryptocurrency prices are constantly moving up and down. You must do a lot of research first into a particular coin that you're interested in order to decide whether you want to invest in it or not. Not everybody invests in Bitcoin. Some people prefer other coins. Not everybody invests in Cardano or Ethereum or others. Some people only prefer Bitcoin. It's really up to you to decide based on your own research and your own responsibility what is the best cryptocurrency for you to invest in. Once again, a gentle reminder that nothing in this video should constitute financial advice. I'm just a cryptocurrency educator, and at FIRL Crypto, we want to help you build your wealth one Satoshi at a time. Thank you for watching. Don't forget to like, comment below, and subscribe. Hit the notification bell so that you stay up to date with our latest announcements. And don't forget to follow us on our Instagram channel at FIRL Crypto or search for our Facebook page at FIRL Crypto. Thank you, and I'll see you guys next time.